All right, perfect. So we are now live and recording. Want to welcome everybody again who's just logging in. We're actually now just getting started. So before we get started, guys, of course, goes without saying, I want to welcome everyone and thank you all for joining. But where are you joining from, if you wouldn't mind sharing? I like to kind of get to know where people are logging in from. Usually we have people from all around the world. So we can just take a couple minutes and find out. So we got Spain, Nevada, Florida, Portland, Toronto. We are recording this, yes, Don. Philly, Fort Worth, Oklahoma, England, awesome, North Carolina, excellent. So, like I said, people all over the globe. So, as I said a moment ago, I want to thank you all for taking some time out of your day to be here. Hope, I don't expect this is going to go much more than an hour. If it does, it's going to be because of your questions, and that's totally fine. So if you have questions, as I said before, I encourage you to ask them. In fact, the more questions, the more interaction I get out of you guys, the better the experience is going to be. So I not only ask you that you ask questions and interact, but I encourage you to do so as well, because, as I said, it's going to just make that much better an experience for you as well as for me. I mean, I don't know anybody that likes hearing their own voice or talking to themselves. So, if I can ask anything of you guys, it would be that you do ask questions, interact, and like I said, it'll make it that much better. So with that said, we're going to get underway here. Just quickly, let's just get it over with. Standard disclaimer, it is possible to lose money trading. And if there's anything I can guarantee, guys, it's that you will lose money trading. And I don't say that to scare anyone. I say that to be perfectly honest with everyone. I'm not here to tell you that I've got a system or method that is foolproof. That's just foolish to say or to think. So it is possible, and like I said, likely, guaranteed even, that you will lose money trading. But what I'm going to share with you today, and what I share with you in the course that we have here, is how to manage those losses so that they are smaller than your winners, but also how to maximize your winners, and how to analyze the charts in a way that the times when you place a trade, you will be right more often than you're wrong. Okay? That's what it's really about. I mean, look, this is like any other business, and there are going to be costs involved. It's no different with trading. One of the analogies that I like to use, and then we'll move on, is trades that you place are like employees, right? This is your business. Any trade that you place is an employee to you. Your expectation is that that employee is going to do the things that are going to make you money. And if it's not acting well, if that employee is acting out, misbehaving, whatever, if it's not acting in alignment with what you envision for it, what are you going to do? Right? You're going to get rid of it. You're going to fire that employee. So trades are no different. They are your employees. If they're not doing what you expect them to do within a certain amount of time, then you need to just cut those losses, end that relationship. And it's not to say that you never cross paths again, but in this particular moment, it's just not meant to be. So that is something we all need to understand as traders. Okay? Now, with that out of the way, what is our agenda here for today? Well, first of all, I'm going to tell you who I am, because it's never necessarily comfortable talking to someone that you don't necessarily know. And while some of you may know me, plenty of you guys here probably don't as well. So I'll give you a little intro to myself, and hopefully that makes you guys a little more willing to interact as well, putting a face to the voice, etc. We'll then talk about why you're here, what you do not need, and one pattern to get you making money tomorrow. Right? Obviously, today's over, but one pattern that you can start using to get you making money tomorrow. And then how you can get started. Okay, so as far as myself, this is a picture of me and my daughter, and this was actually we were about to head out to the daddy-daughter dance through her school, so that was a nice memory and nice evening that she and I had together. All right, now so as far as my background, I've been a trained trader and investor for 9 years. Before that, I went to Pace University and graduated from there, Lubin School of Business, and knew what the markets have to offer. I knew what the markets had to offer. I was fortunate to, grow up around the business and around the markets, so I dove headfirst right in. And, my journey's taken me through different paths or on different paths. I traded futures, ETFs, some equities, and still do that from time to time, but also trade Forex as well. Since that time, I've become an active contributor to T3's Buzz and Banter. So if you're not sure what the Buzz and Banter is, basically, if I had to summarize it, it's a real-time news and trade idea service. Right? That's basically, in a nutshell, what it is. And we'll talk about how you can get that for free to test it out for a month a little later. I'm also a certified instructor for a variety of the programs that we offer here as well. So that's a little bit about me. Hopefully, as I said, that makes you a little more comfortable. All right. Now, why are you here? In other words, guys, and this is where I'm going to look for you guys to participate from here on out, basically. Why are you here? In other words, what are you looking for from trading? What are some of the reasons that you guys trade? And keep in mind, there's no right or wrong answer. And I'm not going to single anyone out, so don't think this is, high school where people get called out for giving wrong answers or anything. This is completely based on your opinion. Right? So why are you here? What are you looking for from trading? And obviously, money is the driving force behind doing anything. We're working, we're doing this so that we can produce profit. But beyond the profit, what are you looking to do with that money? Right? What are you looking to do with that money once you have it? Freedom, retire, additional revenue streams. Obviously, I agree with you there, Scott. Never stop learning. Always have to be moving forward. Right? So yeah, exactly. Building retirement, freedom, being able to go on vacations. Exactly. So as you guys said, generating income, building for retirement, more time with family and friends, go on vacations. That's really why we do this. Right? That's why we do this. And that's what I'm going to talk to you about is how you can do this with confidence. I'm not going to talk to you about something that is only working in today's environment. I'm going to talk to you about something that has withstood the test of time, something that you can go back and look at charts from, way back when basically the markets first started. You can go back and look at charts and see this pattern I'm going to talk to you about. You'll see it back then. You'll see it in today's environment. So this is something that, like I said, is proven over time. You can see here I've got a snapshot of a chart from the early 90s, and here from the year 2015, right, throughout the entire year of 2015. And as you can see, I've got these circled areas where you've got pretty much the same or similar patterns developing. And this is highlighting the one that I'm going to talk to you about. Of course, there are other patterns that set up on this chart that one could have taken advantage of that we teach. But I want to really focus our attention in on one thing right now and really start to grasp the power and the concept of this one thing. Okay? But as I said, this is a method that's been proven over time. And one of the things that I hope you might be noticing is the fact that this is a very clean chart. I don't have a bunch of indicators on here. It is my opinion and belief that indicators are unnecessary. Now, yes, I have a moving average on here, which helps speed up the analysis, but let me ask you guys, how many of you have been frustrated by indicators at one point or another? Yeah, right? I mean, everybody's saying me, I have, yes, yes, me. Yeah, exactly. And it's because they are extremely subjective, right? So that's why you don't see these things on my charts. You literally, through the methodology that I'm going to talk to you about here today, you can literally add your way to profits. What do I mean by that? We have a point system that we teach where this pattern that I have circled is a 90-point play. So in other words, with what I teach in the course, you will have the tools to rate this and say, hey, this is a 90-point play versus something that might only be, say, a 20 or 30-point play. Right? And I mean, there are different names for it, but we look at it in very specific ways. We look for very specific amplifiers to occur in alignment with this pattern, which is known as the T3 buy setup. Right? And again, I'll talk to you in just a couple minutes about what exactly the T3 buy setup entails. But again, this is a beautiful pattern that resulted in a very explosive move to the upside. Right? So indicators, already spoke about them a little bit, but you've got a variety of different indicators. This list is only beginning to scratch the surface. But let me ask you this, guys. What percentage of traders fail? What percentage of traders fail? 80%, 90%, 95%, 95%, 99%, almost all. Yeah, I mean, we all know the statistics, but yet we're all here right now. So we know the odds are stacked against us, but yet we still believe in ourselves. Right? We still believe in ourselves and our ability to do this, which is great. I mean, you have to have that confidence. So I applaud you all for not only being here, but also being here in the face of what the statistics say. All right? Now, let me follow that question up with another question. How many beginning traders use indicators? All of them, 100%, most, all. Right, exactly. I mean, almost everyone is using indicators in the beginning. Exactly, and we have someone, I don't want to necessarily say their name, But we've got somebody in the room saying that's what they're told. And I agree 100%. That's what you're told, whether it be from a book or whatever else it may be. But, okay, so 90+% of traders fail, and most all traders start off using indicators. Do you see the connection that I'm trying to make? What is the common denominator here? It's the indicators. It's the use of the indicators that will ultimately cause confusion. So, well, I mean, trend line is a very important indicator. Well, I mean, yes and no. A trend line can be helpful, but what about when they don't work? I mean, how many times do you redraw a trend line before you start to say that it's not working anymore, that the trend is now down? Right? So, trend lines can be after the fact. I'm not disagreeing with you that trend lines can be of value, but I'll tell you this. When I teach you how to use trend lines, it will make their use so much more, 100% more valuable. Right? You will understand when a trend line is going to be pulled back to and held versus when it's more likely to fail. Because trend lines by themselves, like I said, can be very misleading. If a trend line gets broken, do you start now to shift your bias and look to get short? And if so, what happens if we stabilize at a lower level and price rallies back up to a higher high? You're going to redraw the trend line at that point? It leads, and that's the thing with all indicators, it leads you down this path of uncertainty. Well, how many trend lines do I have to draw? When is it enough? Or what indicators or what combination do I have to use? So that's what I want you guys to try and move away from and really focus on what truly matters. And what truly matters is what these indicators are all based on, and that's price. And I'll talk to you guys about that in just a minute. But I want to show you this real quick because it reinforces what we've been talking about in terms of the statistics. All traders start with a dream. We all know that feeling. 40% trade only for 1 month before throwing in the towel, before saying, you know what, this is a lot harder than I thought. Or this just isn't working the way I thought. Or they're using such large size that they blow out their account before they even gave themselves a chance. So 40% trade for 1 month. 80% will quit within the first 2 years. So, I mean, if you're falling anywhere within these bottom tiers, these bottom levels, don't become one of these statistics. And honestly, the fact that you're here right now tells me something about you. It tells me that you're looking to get educated, that you're looking to not become a statistic, which is a great step. Only 7% remain after 5 years. So we all know the statistics. We all know the numbers. But if you approach trading the right way, then it can be one of, if not the most rewarding fields that exists. But you have to get educated. You have to learn from someone. And if you don't, I mean, the bottom line is this. If you don't learn from someone or through some method, you're going to basically decide, you know what, I'm going to hire the market as my teacher. And we all know deep down how that goes. The survival rate is not good. So, as I said, what really does matter? Price, volume, one or two moving averages. You don't have to go crazy. Price support and resistance, right? That's what matters. And then having a support system, a group, a community of like-minded traders that are going to be around to help you out, let you know, this is a good setup, this is not such a good setup. And then having the ability to know and recognize your mistakes. One of the most frustrating things, at least for me, was placing a trade that worked or didn't work and not knowing why that was the case. You guys know what I'm talking about? You know what I mean? Like, if you place a trade that works, it's like, okay, well, great, it worked, but how do I do this again? How do I replicate it? And if it didn't work, well, why didn't it work? What do I need to do to avoid that happening again? And like I said, if you don't have some kind of system in place, if you don't have a plan, then these things are going to consistently happen over and over and over. So again, the need for education. And this leads me to the T3 buy setup, which is that pattern I was telling you about. This pattern, at its core, is really made up of only one key piece of information, and that is a multi-bar pullback. Now, I'll go a step further and say that we want it to be in an uptrend. So we want a multi-bar pullback in an uptrend. Now, it generally speaking, in terms of ideals, a 3 to 5 bar pullback is kind of the sweet spot. But it doesn't have to be. It could be more. It could be less. But that's generally what we're looking for. Right? We don't want it to be so close to the prior high that by the time it's beginning to move up, it's right into resistance. And we don't want it to be pulling back so much that it's beginning to negate the previous message, the previous strength. Right? Does that make sense, guys? Right? If it doesn't pull back enough, it may turn into a double top. And if it pulls back too much, it may start to negate the prior strength. So we have to find that sweet spot, and we do that by looking at the chart. And so the beauty behind this is that it works in all time frames. So if you look at a tick chart, which is an activity-based chart, it'll work. If you look at a 1 minute or a 5 minute, it'll work there as well. Or maybe you like using the 15, 60 minute, it works there. Daily, weekly, monthly, maybe you're a longer term trader building for that retirement we spoke about. It works there as well. If you can chart it, you can trade it. It's that simple. So we're going to go through some examples looking at this setup. But again, a multi-bar pullback within an uptrend is more or less what we're looking for. Now, there are some amplifiers, there are some other things as part of this point system, because as we're looking at this here right now, it's a 20-point play. But there are other amplifiers or enhancers that can occur which make the setup higher odds. And we get into all the details of that in the course. I don't have, unfortunately, the time to get into it all here. But there are things that we look for in addition to this setup. Now, that's not to say this isn't a highly accurate setup, because it is. But if we can take what is already a highly accurate setup and make it that much better, I don't know anybody that wouldn't be interested in that. So anyway, let's go through and look at some examples. So this is triple D. Not that it necessarily really matters what the symbol is, because again, if you can chart it, you can trade it. So the fact that I've got the symbol there almost is pointless. This could be a futures contract. It could be a Forex pair. anything. It could be an ETF for all I care. But can you guys see the buy setup? Do you see what we were just talking about? And honestly, there's more than one. Can you see it before I highlight it? Yeah? Good. Awesome. All right, so here, I mean, this is the one that I'm talking about or going to specifically highlight. There was another one up here. Here was a pullback that could have been played as well. So if you were looking at that, you would not have been wrong. It was still in an uptrend. It pulled back more than 3 bars, but like I said, it doesn't have to fit within that constraint of only 3 bars. So again, there is more than one. And they all made money. But here's the one that I'm specifically highlighting. I think most traders look to trade the open, and I will also point this out. This is from the beginning of the year. Right? This is from the beginning of the year. You can see here January 8th. The reason I'm pointing that out is because I want you to realize, again, as I said earlier, this isn't something that's just working in today's environment. This is something that worked way back when. It's something that worked last year, earlier this year, and even still to this day. And I feel that that's important for you to know, because with any kind of education, it should be something that lasts, that withstands the test of time. It's not something that is just working today, but maybe tomorrow or the next day, it's a skill that is gone. And then you're going to have to relearn a new skill? Find something else? Who wants to do that? Now, I'm not saying that you don't constantly fine-tune your craft and constantly look to get better. But this, at its core, is all you need. This is a 20-period simple moving average. So, anyway, there's your buy setup, right? It's on support, also at a gap fill, which are some amplifiers that we do discuss, right? You're looking at about a 25-cent stop based on how we teach you to enter, where we tell you to put your stop, and how to manage. But based on the entry and the stop, you're looking at 25 cents. Right? If you managed it all the way up to this high here, you're looking at a $1.40 move. But in all honesty, guys, it's not that easy to manage it all the way up for the full move. And I don't like telling people that I got in at a low and got out at a top. I think that that's unrealistic. Does it happen? Of course it happens. But my concern, my focus, is capturing the majority of the move. If I can capture the majority of the move, that's what I want. I don't necessarily have to be the first one in, nor do I have to be the last one out. In fact, guys, you tell me, how often does it really work out that way? How often does it really work out to where you can be the first in and the last out? You might plan for that, but is that realistic to expect? In my opinion, it's not. So anyway, let's just say you got 79 cents out of it. You got an 80-cent move. And the reason I say 79 is because if you got out under that bar, that's just what it worked out to be. So I think that's more realistic. You got an initial push up. It starts to stall. Maybe you take some profit at that point, and then it moves up again. And at that point, you're saying, okay, well, it's getting away from the moving average. Maybe there's something to the left, whatever the case may be. You just say, you know what? I got a nice move. I made 80 cents on a 25-cent stop, over 2 times my risk. I'm going to take it. We're human after all, right? If you did that on 200 shares, you're looking at just over $150 profit. On 1,000 shares, almost $800. On 2,000 shares, just over $1,500 in profit. And again, I mean, it's simple. It's following the trend. It's buying a pullback on something that is already showing strength, and then having the objectivity to manage it to a profit. That's all you need to do. It doesn't have to be this complicated or convoluted system. Simple is better. Unfortunately, though, I will say this. It's almost, in this industry, it's almost, the opposite thinking is that the more complex it is, the better it is. And in my personal opinion, that is far from the truth. So how do you find stocks that are doing this? Well, you could, we're in earnings season right now. You could be looking at stocks that are gapping up or down. So or something gapping on news. Those would be the things you first gravitate towards. Or you could do a scan for stocks that are trading above the 20 MA. And then you start looking for things that look like this. Now, of course, you'll come across things that are well above the 20 MA that are silly to even consider, but that's how you might filter something like this, is using earnings, using news, a scanner that tells you what's above the 20 MA, for example. Those are ways to do it. Or you can also join a community of traders where they're also scanning for ideas as well. So, more eyes looking at more things generate more ideas. So you can look for things based on what I suggested, but then you can also be in a room with traders who are looking for the same thing as well, and all sharing ideas, coming to figure out, what is the best. What moving average is good? 20, 50, or 5 on the daily? You can use the 20 and the 50 together. The 20 can be kind of a more short-term moving average. You might even use the 8. I wouldn't necessarily suggest using the 5. I think the 8 is a more commonly followed moving average. And that 8 MA is really going to help you to follow momentum. The 20 MA is going to give you a better grasp or idea for the overall trend. And then the 50 is more of an intermediate trend, giving you an idea for what, say, the weekly trend is like. So they're all good to use, and they all have their own application. But don't think there's anything magical about any of them. Because without a setup, it's just a moving average. Here's another example, INCY, and this was a 2R trade if you bought it here. This was a 2R trade, just keeping it simple. Gaps up, gets momentum, there's your little pullback, you buy it over the highs, and then boom, off it goes. So like I said, this was a 2R trade. Now, some of you might be like, what the heck does that mean? What is a 2R trade? Basically, what it means is that you made at least 2 times your risk. And that's how I like to talk about trading in terms of risk. I don't necessarily condone just buying an arbitrary number of shares. Does anyone have an idea as to why I would say that? Why is it a bad idea to just use an arbitrary number of shares? In other words, what if I just said, anytime I get a setup, I'm going to trade 1,000 shares? Why is that a bad idea? Does anybody have an idea or guess? Right, you haven't considered your account size. You could be overexposed, right? One trade you could be risking $2,000, and then the next trade you could be risking $200. So it's going to create these wild swings in the account. So yeah, exactly. You guys got it. You have to define your risk. So you need to say, I'm going to risk $400 per trade. And then based on that risk amount and the size of the stop, I can figure out how many shares I need to be trading. So when I say you made 2 R's, it means you made 2 times your risk amount. So if you're risking $400 a trade, you're making $800 on this one. Okay? So again, that keeps it simple. It keeps it manageable. And you're not going to be this wildly emotional trader based on using a set number of shares all the time, right? Because like I said, you're going to create these wild swings where your emotions are going to be up and down and up and down. By having a predefined risk, you're able to focus on what really matters, which is the chart and the patterns and the movement. Right? Personally, no, I do not trade options as well, but I can tell you that you can use these patterns to trade options. All right, so here's another example, Solar City. And again, question is, can you see the buy setup, the T3 buy setup? Do you guys see it? And again, there was one over here, kind of a wider forming buy setup, but that's not necessarily the one that I'm looking for. Hopefully you can see it as it is right here. And, let me ask you guys, at this point, we've looked at a couple examples. Is this a fairly easy thing to do? Now, in concept, obviously, when you're looking for these things, it adds another layer. But the idea of it, the concept of it, does it make sense? Because if it makes sense, that's the first step. I would never ask anyone to do something that doesn't make sense. If you don't understand it, then it's not worth doing. But if you can understand this, if it's starting to make sense, well, then it then makes sense to take some next steps, right? Some other steps in investigating. You know what? Maybe there is something behind this. Maybe it really can change my trading for the better. But if you don't even understand this, then again, like I said, appreciate you stopping by, but this probably isn't for you. And look, I'm not trying to be harsh about anything. I just, I don't want to waste your time because I know time is valuable. So anyway, if you played this, you're looking on this example about a 55-cent stop if you were to play it the way that we lay out. On 500 shares, depending on how you managed it. And look, if you manage this using a bar-by-bar trail, which is probably the tightest you can get, you would have gotten out as it moved up here. So you're looking at about a $1,500 profit on 500 shares. On 2,000 shares, you're looking at a $6,000 profit. So it's not even so much about how much something's moved, but really the share size behind it. And I'll talk more about that in just a little bit. Right? But obviously, the money is there. The ability to profit from this pattern alone exists. So let me just talk to you briefly about this program, and then I have more examples to show you and walk you through. But this program that I've been talking about is called the Emerging Trader Program. It's a 5-day course from 4:30 in the evening until 6:30, 7 o'clock, depending on questions and how things are going, but it's 5 days of education beginning August 8th. This is a program that used to go for over $2,000, but that's not the case, at least not for today. It includes a course manual that is yours to keep, basically your textbook that you can go back to and read and notate so that you will always have this to use as a reference. It also includes 1 month to our black room, which is our trading room, where you have traders calling out trades, giving you exact entries, stops, targets, etc. That alone is $295. You get a month of that. Right? You also get a month of our live virtual trading floor with guys like Scott Redler, Dan Darrow, who does options, Mark Sperling, a lot of gurus, and you get that for free. And you also get that buzz and banter, which I made mention of earlier, for free as well. Right? So you're going to get all of this. 5 days, education, 1 month to follow it up in various trading rooms and with a real-time news service to help keep you updated on things that are happening throughout the day. So, all of this, can you just join the trading room if you want? Yes, you can. This all is, I don't have the price on here, but it's $995. It's $995 for a program that used to go for over $2,000. So seriously consider taking advantage of this opportunity. And if you are interested, you can email, what's the email that they can respond to? info@t3live.com. All right, so if you email info@t3live.com, let them know you're interested. They can help get you set up. And guys, if you do sign up, you'll get the manual right away. So you can start looking over everything and getting yourself used to the content. And then it's yours to keep, like I said. But back to the regularly scheduled program here. It's not about hitting home runs when it comes to trading. You don't have to get big moves every day. We got a question here. What's the minimum to invest once the course is over? Well, the course, like I said, along with all of the month of the trading rooms, the month of the buzz and banter, that's $995. After that, it's up to you. Do you want to stay in the room? Which will pay for itself. I mean, I guarantee you that. It will pay for itself. As far as your trading account, well, if you're going to be an active day trader, you have to have the account, the minimum day trader balance, which is $25K. Or there are other options that you might consider, such as becoming a prop trader. But that kind of goes off on a totally different topic. So if you have interest in that, I certainly encourage you to talk to, one of our team members here, Sammy and Amber, both in the room. But like I said, it would take me off on a tangent. So with only 50 cents a day, you can reach your trading goals. So again, I don't want you to think it's about hitting home runs. And look at the math. Look at the table here, because it speaks for itself. And I'm not saying that you need to hit 50 cents a day, but on average, that's what you want. So, I mean, maybe you make $1 today and then tomorrow you lose 50 cents. So, on average, it's 50 cents a day. At 100 shares, That's $12,000 a year. Now, I don't think that's why anyone is here, to make 12K. But if you can make 12K while still working a full-time job, I mean, this starts to prove that the method you're trading works and that you're confident in it. And so then you just bump up the shares. So I'm going to skip over here to 500. So at 500 shares, still doing the same thing, you're up to 60K a year. And as you can see here, you get up to 2,000 shares, you're looking at $250,000 thereabout. So it's not necessarily about hitting home runs. It's not about having to capture these huge moves. If you can find consistency at 50 cents a day on average, you can make a living doing this. It's that simple. So if you can find a method that allows you to make on average 50 cents a day, you can eventually be making $250,000 and more. So it is very possible. You just have to find something that works for you and commit to it. Because one of the deadliest things you can do is bounce from one thing to another. If you are constantly bouncing around from this education to that education and that indicator, you're going to drive yourself crazy. And by the way, as I already said, it works no matter what you're trading. Here is pound US dollar. So this is a Forex pair. There's your T3 buy setup. Pull back above the moving averages, you buy it, boom, off it goes. This gets you making money. This one pattern alone will get you making money. You just have to find it. You have to know what to be looking for. And you have to have the confidence to trade it, to believe in yourself. And that only comes through education and repetition. But there's your buy setup over a 70-point play based on our point system. So we have somebody asking, do you target a certain equity price? Now, when you say that, do you mean, do I look for stocks within a certain price range? Is that what you're asking? No, I mean, I don't. I mean, I'm not going to go and trade something that's, Chipotle or what have you, but it really doesn't matter. I mean, you look at Amazon, you look at Chipotle, these patterns work there too. But it works on anything. I mean, you want to make sure that there's good volume, especially if you're going to be trading it intraday. You want to make sure that you're getting nice, clean, quality movement. You're not getting gaps or dashes on the chart. But as far as price range goes, doesn't matter. Makes no difference. And guys, understand something. Part of why this works is because it's based on human emotion. We're taking advantage of the fear and greed being experienced by other traders in that moment. So we're making decisions based on what's happening right now, not based on something that's happened in the past, and not based on something that's hopefully going to happen in the future, but rather in this moment. Now here's Apple from yesterday. Do you see the buy setup? Yes or no? This is actually, this is from yesterday. This goes back a couple days, you can see. But can you guys see the buy setup that we were talking about? If you can see the buy setup, you're well on your way to understanding this method and beginning to make money. It's right here. And if you took this on Apple, you're looking at about an 18-cent stop, right? On a $200 risk, you would have made about $700, just a little more. $500 risk, you're making almost $1,500. Almost 3 times your risk. And look, this is assuming an exit under this little inside bar there. Right? This is assuming that you got out right here. I'm not assuming that you're, playing it all the way up to the high, because like I said, that's unrealistic. And if you were using $1,000 risk, you made almost $3,000. So it doesn't necessarily matter what your account size is. It doesn't necessarily matter what your account size is. I mean, what if you were only risking $100? Right? If you were only risking $100 and you got that move, you're looking at trading roughly, 550 shares or so. And if you got, say, I forget exactly what that was, but say it's like a 60-cent move. You're making $300 on a $100 risk. So it's not about the size of the account. Now, if you have a smaller account, you're obviously going to be risking less, but it's a numbers game. As you grow the account, these are the numbers you're going to start getting into. You're going to start getting the confidence to risk $500 to make $1,500 or $1,000 to make $3,000. And guys, excuse me, by the way, I mean, the course we're talking about is, as I said a moment ago, $995. This one trade would have all but paid for the course. I mean, there would have still been a little more to make up, but this one trade alone would have paid for the course. So you can't tell me that the course is expensive when 1 or 2 trades could take care of it, and then anything else after that is money in the bank. This pays for itself. It pays for itself. Here's FEYE from the other day. You can see here, July 28th. There's your buy setup right there. Pulling back, moving average, some other factors along with it. Boom, explodes to the upside. So you're looking at about an 8-cent stop there. Not going to beat it to death, but look, again, it easily pays for itself. This trade would have paid for the course, and then some. This would have paid for almost 2 courses if you wanted to go with a friend. Why does the market move every day? Fear and greed. People thinking it's going to go higher, other people thinking it's going to go lower. Supply and demand. Speculation. So, like I said, I mean, it works on any stock in any price range. Well, if you can't be here intraday, then look at your daily charts. If you're more of a swing trader, scan your daily charts for these setups. Facebook, look at Facebook, just off the top of my head. Facebook is an example of something that has been pulling back after earnings. And it's something that I would be watching for over the next couple days to make an attempt to start moving back to the upside. So if you, again, like I said, go and look at Facebook, it's not the best setup at this point, but it is something that just comes to mind. If you look at the daily, you'll see it. So what you want to do is look at the daily chart, scan for stocks that are above the 20 MA, and set it within a price range, put some volume constraints on it so that you're not looking at thousands of different symbols. But that will help you to find these opportunities. Plain and simple. This is all you need. This one setup. Now, I teach other setups as part of this course. I mean, look, don't misunderstand anything here. We're not just going to teach one pattern in the course. You're going to learn 7 different patterns with at least 12 different amplifiers. So let me be very clear about that. This is not the only thing that we'll be talking about. But this right here is over a 70-point play. You literally and figuratively cannot afford to miss these. It's simple, it's easy, it's effective. All right, so if you were risking $200, right? So if you're risking $200 on an 8-cent stop, you're buying 2,500 shares. So you'd have to know what your stop size is in order to completely answer that question. We had somebody asking, on $200 risk, how many shares can you buy in order to make $1,700? So it depends on what the size of the stop is. Okay? So again, this is all you need. Plain and simple. You don't need indicators. You don't need red light, green light systems. You don't need fib retracements, etc. All that stuff is hocus pocus. It's confusing. It is, for lack of a better word, a crutch that you become reliant upon. It's a crutch that you don't need, right? So what this course can do for you is it can empower you to break free of those crutches or those chains holding you back. T3BS means a T3 buy setup. So it's a strategy that we use to get long. So again, guys, this is the course curriculum for the Emerging Trader program. This is a 5-day course, as I said, and this is kind of an overview. This is not the table of contents. If you want the table of contents, you can email info@t3live.com. They can get that to you. But we start with, in a sense, the basics, understanding trends in a more concrete, crystal clear point of view. And then we take a deeper, closer look at trends and how to understand the inner mechanics behind them, when trends are beginning to change. I don't want to wait for multiple higher highs and higher lows before I start to look at getting long. At that point, it's late. I want to know at the earliest possible moment when I can look to get on board. And that's what we talk about. We talk about the amplifiers or those trade enhancers that I was talking about. We talk about the various setups, climactic setups, how to go against the trend, how to go short when things are moving down. I mean, this isn't something that's going to work in all environments because like today, market was weak, right? Market was moving down. So I don't suggest you look for this pattern in a market that's trending down. What I suggest you do is look at the T3 sell setup for opportunity instead. This is a dynamic, diverse course. Teach you how to go long, how to go short, whether we're trending up, trending down, going sideways, it doesn't matter. This is a course that'll have you prepared for any and all environments. Okay? The T3 stands for the company. T3 Live. So again, as I said before, This is a 5-day course beginning in just about a week, a little less than a week actually. It includes the course manual, the 1 month access to the trading room, 1 month of the virtual trading floor as well, which is another trading room that you'll have access to. Right? The buzz and banter, all for $995, which, like I said before, guys, this is a one-time fee. This is not a reoccurring fee. So you pay this once, you get the course, you get the manual, and you learn how to place trades that will pay for themselves. If this is something you're interested in, what I would ask you to do is simply email info@t3live.com with the subject Emerging Trader. Include your name, number, and if you've worked with anyone in the past, let them know, and they'll get in contact with you. But that's all you got to do. It's all about keeping it simple. It's about finding a strategy that works and doing it over and over. That's it. Keep it simple. The KISS method. The bottom line, as a reminder, is this. You need an education. In fact, you're going to get an education. There are 2 ways in which that'll be accomplished. Either from the market, as we discussed earlier, and the cost to learn from the market is unknown, or you can learn a method that's withstood the test of time. But the bottom line, as I said, is you will get one way or another. It's up to you which path you want to go down. But an education will be given one way or the other. So with that, before you take off here, I want to, again, thank you for being here. Again, people logging in from all around the globe. So it's much appreciated. I know people here, in the early morning hours. So again, thank you. And if anybody's got any additional questions, I'm happy to answer them now. Otherwise, email info@t3live.com to get going here, get your manual, start going through that, and getting excited about learning this. Do you guys assist in finding the trades during the training is after hours, so we can definitely look at live charts. But if you want to find these things in real time, that's the 1 month of the black room that we give with the course. That 1 month of free time in the trading room is for that purpose, to find those setups, find those opportunities, and exploit them. And if you feel that this is expensive, anything worthwhile isn't cheap. I personally feel that it's not expensive. I mean, especially considering that there have been people that have paid upwards of $2,000 for this program. So I know for a fact it is not expensive in comparison. But again, I mean, if you're going to learn a skill that you'll have for the rest of your life, I mean, there are people paying hundreds of thousands of dollars for college. This is a step in the bucket. So, doesn't look like anybody has any other questions. I As I was going through the presentation, I was answering them as best as I could as I saw them coming through. So again, like I said, I want to thank you guys for being here. Email info@t3live.com. Let them know you're interested, and we'll get you set up. We'll get you going. It is said that the Dow's to fall 80%. Honestly, that may happen, but I don't see it happening right now. Those same people have probably watched as the market has been moving higher, as the S&P has been making all-time highs. It's this, those are probably the same people that have been trying to sell this market short as it's just been going up. That's why, what you and I think, honestly, it doesn't matter. It doesn't matter what I think the market may or may not do. I need a method that's going to make me objective. I need something that's going to put me in the driver's seat and realize, look, I'm not trying to get married to any kind of a bias. I need to be objective, because if I'm not, I might be part of that group saying the Dow's going to fall 80%, but yet it's done nothing to suggest that at this point. Now, you might be able to go back through history and find certain patterns that may be setting up to suggest a fall is imminent, but it's not there yet. And I'm not looking to necessarily waste my time on hypothetical situations that may not come to fruition for another 2 months. That's why we let the trend tell us what's going on. The trend, when it breaks, right? When the trend begins to break, then I'll start entertaining the idea that maybe the Dow's going to fall. But until then, I'm going to stay objective, because that's what's going to keep me making money. Saying that the Dow can fall 80% doesn't help me right now. Do you have a scan to find these setups quickly? We do not at this moment have a scanner that's going to help specifically find these setups. But like I said, there are certain things you can do to find them, such as scanning for stocks that are trading above the moving average, and along with some other factors that we discussed in the course. Maybe you want to look for something that's up on the day. But it doesn't have to be, right? It doesn't have to be up on the day. You can find a stock that maybe gapped down excessively that's been trending higher. So it doesn't have to be up on the day to play it long. But I will say again that being in the trading room will help in finding these setups, because you've got a group of like-minded traders that are looking for the same things. Any particular industry or sector that it works best? No, because you got to remember that this is based on human emotion. So as long as fear and greed exist in the market, which will always be the case, this will work in any industry and on any sector. For example, today, airlines were particularly weak. There was great opportunity in the airlines. So I wouldn't say that it works best on any one sector or industry. It's about finding where the movement is, and then letting this setup and the setups that we teach in the program come to you. You're welcome. All right, guys. Does anyone have any other questions? If not, I will look forward to you guys being with me starting August 8th. It will be a life-changing experience. Looking at things in this way with this much detail and clarity, as I said, will really open your eyes, and I think you'll come out of it looking at the markets in a whole new way with a lot more confidence. All right? So thank you guys as well for being here. As I said earlier, I sincerely appreciate it. I wish you all a wonderful evening. Enjoy the rest of your day or evening, depending on where you're joining from. But I'm going to sign off here. And like I said, if you have any questions, if you want to see that table of contents, just email info@t3live.com, and they will get it over to you. All right, guys. So thanks again, and have a great day.